Welcome to Markets Now. I'm Michelle Rook along with Randy Martins and Martinson Ag. We're looking at mostly higher prices in grain and livestock futures trade, except for a few of the feeder cattle contracts. And Randy, I want to start off with soybeans because soybeans actually got above the January highs during the session so far, but it's been meal that's been the real leader again here with more new contract highs there. How much longer are we going to keep this rally going?
Yeah, meal has been the driver, and that's certainly been helping to push soybeans. And I think, as long as we keep having some issues with Argentina with their weather, they keep talking about some rains coming in, but, over the weekend, they were disappointing. They didn't amount to as much as expected. They pulled back some of the rains that are expected here for this week. So now we're looking at hot, dry conditions, which is likely going to, lead to another cut as far as that crop is concerned. And that, I think, is helping to support our meal market. It's going to drive demand to the U.S. And until we see something change in Argentina, I think we're going to continue to see that meal market trade higher.
Yeah, and I said new contract highs were above the $500 mark, closing in on $508. And I think I read that Friday was the highest close that March meal had ever had in history. So it is impressive. So, is that what can eventually take this soybean market back up to the contract high areas, do you think? And what's our chances of getting there?
Right now, I think there's a pretty good chance that we could get there. And yeah, it's going to be the meal that pulls it along. I think that's going to be the one that helps drive the soybeans. We are going to be looking also at trying to decide how many acres we're going to plant here in the U.S. And I think that trying to get those prices, the crop insurance base prices being set now, get it more in line with where we were last year. Right now, it's a little bit behind or a little bit lower. So I think that'll help pull that up, which will help buy some acres and help, increase the potential for us for meal. But we've got a lot of demand going on as far as the meal market is concerned. If you look at the decrease in Argentina and the exports that we could possibly pick up there, we need to get that meal and we need the acres to do it.
Corn trying to follow soybeans here this morning, but we're right up into chart resistance again. What's it going to take to get over that and close above it?
The corn's going to struggle. I mean, we've got exports that are running behind last year's pace. We've got our ethanol, which we did see a reduction last week, in USDA's report. So corn's got a little bit bigger headway ahead of it. We're also looking at more acres potential for 23. So I think that's also in the back of everybody's minds. Overall, it's going to take the soybeans to continue to push and the competition between acres that's going to help push the corn market higher as well.
Or a problem with the safrinha corn crop in Brazil, which, we're just on the cusp of maybe a few problems there with too wet in the north and maybe not being able to plant there, right?
Oh, exactly. And that will help start it. I mean, right now, China is looking at buying their soybeans from Brazil. So they're kind of holding off on waiting to do a lot of buying. We've seen them come in. We've actually had some good sales the last 2 weeks, but they're waiting to see how the planting progress goes for the safrinha crop. Right now, it has been too wet to combine the beans, which makes it too wet to plant the corn. And, we've got about another 2 weeks. And if the things don't progress or improve in Brazil to get that crop planted, I think we could see China come in and buy aggressively in the U.S.
We had a big day on Friday putting in war premium. We started off a little lower this morning and charged back higher here. So are we continuing to be concerned about developments with the war and the export corridor and whatnot?
I think we are. I mean, we've actually, started to see the escalation of the war as Russia's trying to wrap it up, for the lack of a better word. We're also seeing Russia kind of talking a little bit bad about the grain, the Black Sea Initiative. They're not so in favor of this trade deal they've made. That expires in March, and they need to see if they're going to expand it or see it continue. And then we're also looking at, right now, as far as our wheat market is concerned, our conditions continue to be poor in the Southern Plains. And we're seeing open interest increase in wheat, which is all of those are friendly, a little bit friendly towards the wheat market.
Yeah, and we got some very strong technical signals on Friday, closing Kansas City wheat above $9. And we've got funds short in Chicago wheat. So, technically, do you think we have enough momentum to get some of those shorts out of those positions too?
I do. I think we do. I'm actually been friendly wheat. I think the conditions aren't there. I think we need to try to buy spring wheat. I think spring wheat is going to have a tough go of it to add acres up here in the northern plains because of the crop insurance price being setting now. We're actually seeing Durham a little bit ahead, so we might see quite a few acres, especially in the north central and the northwestern part of North Dakota goes towards Durham instead of spring wheat, and I think that'll all come in and help support the market.
Gotcha. What about the cattle market? Some more new contract highs in live cattle futures today, pushed by higher cash. If cash continues to kind of have this orderly push higher, do you think that this futures market just keeps going up along with?
I'm friendly cattle as well. And I do think that the biggest trouble we've got is going to be one, the lower pork market, and two, the Fed. So I think the next Federal Reserve meeting isn't going to be until the middle of March. So I think we've got till March to continue to see some good strength in this market. A couple of weather storms and some slowdown and movement. Packers are going to need to come to town and buy cattle, I think. So, yeah, I think the cash will help continue to push it as well as tight supplies. My biggest concern is whether or not the domestic demand can continue at its current pace.
Yeah. And hogs, we're back to the plus side. Is that just short covering because we had a lower week in those back months, or are these ASF concerns?
I think it's a combination. I mean, it's kind of funny that we see the big jump after the report of this AFS in South Korea. So I think that's helping to give this thing a little bit more strength. We'll see if it follows through, but that hog market does need help. So if it gets it from the disease concern, I guess that's where it gets it.
Certainly a lot of outside market chatter, Randy, as well about China and trade tensions escalating here with the spy balloon last week. What's your general thought? Is it having a market impact or not?
I don't think it is. I think it's a lot of chatter and maybe some ways to kind of divert attention off of some other things. So I don't know. I mean, we're still seeing China buy our products. They're doing it kind of, a little bit under the radar, for the lack of a better word. So we're still seeing them buy our products. And, Russia is also another one where they're still lowering their wheat price, but they're also playing some games in the crude oil market where now they're looking at lowering their production by 500,000 barrels a day. That should come in and help support the crude market. But overall, I think it's just a lot of chatter to kind of divert attentions.
All right. Thanks for joining us. Randy Martinson, Martinson Ag, and that's Markets Now.